That's that time of the morning where we check into the eye of the bulls and the bears, for that matter. Check and see what's happening to your money on Wall Street this morning. Not a bad day yesterday. I'm not sure we're going to be able to keep it going this morning. There's a few things going on in the world that are confusing people this morning. Let's check in on Phillip Statler from Statler Financial Services in downtown Sebring and get his take on the matter. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, we're doing well today. I hope you are too. As we head into October 1st, first day of the quarter, first day of the month. Um, and we start off with a port strike at the ports of call, and so that could be a problem, right? So
Yeah, it could be. I think hope was springing eternal yesterday because we entered the quarter on a green note. S&P set another new record yesterday. Let's see, Dow led the quarter with an 8.2% gain during the quarter. NASDAQ gained 3%. We end up with solid green yesterday, and the kind of green you like to see. The Dow was up 17, S&P was up by 24, NASDAQ was up by just under 70. That's the kind of gains you can actually sustain, too, over an extended period of time. So the quarter ended on a high note. Then the dock workers go on strike, and international companies specifically, I got to believe, are getting really nervous over that.
well, and I think even us here at home are getting nervous. I saw one little headline that said doctors say, medication may become hard to get because of this. A lot of our, pharmaceuticals come from overseas. A lot of pharmaceutical companies are based over there. And so that could be a problem as well.
And one of the things that's right, a lot of our pharmaceuticals are made in India, especially. They're all on boats waiting at the harbor at Los Angeles, and a few of them waiting on boats outside of our harbors. And I read a thing, one of the economists was saying that if we have like a 2 to 3 week dock workers strike, it could end up putting such a distortion into the supply chain. And we used the word supply chain an awful lot a couple, 3 years ago. We might end up seeing 6-month out numbers on inflation that rival what we had a couple, 3 years ago. And that's nothing that anybody wants to hear about.
No, no, talk about being dealt a different hand to the Fed. This may mess up their inflation numbers.
I think it could very well mess it up. That having been said, we are not having a bad year on the stock market so far. The Standard & Poor's up 21.5% year to date. And here's a comparison that'll kind of knock a person's socks off. That's the best performance on the Standard & Poor's 500 through the third quarter since 1997. I mean, but there aren't very many numbers that I have for comparison that go back to the 1990s, but it's been party time on the Standard & Poor's so far this year, even with some of the hiccups that we've experienced.
Well, that's right. So we've seen a great year so far, and however, we've got an election to get through, and nobody knows what that's going to do. And now you got the dock workers on strike. What's that going to do to us? As well as we got a whole quarter to go. That's 3 months of a lot of data still to come in.
A whole lot of it. And between the election and the dock workers strike, those two items alone, outside of the fact that, excuse me, I had to cough for a second. Between that, the upset over in China, how long can they keep propping up their economy by cranking out money and loosening up the supply for their citizens? On the international front, we've got at least the possibility of a bubble going on over there. It's not a 100% settled process for the next 3 months ahead of us, is it?
No, it's not. It's not something we can just say, hey, look, we're home free. It's going to be a great year because, well, we still got 3 more months of the game to play. And that's a quarter of the game, right? So that's that could make or break the year.
Yeah, it's far and away the most important quarter for a lot of the retail sector, and retail is very much what drives our economy. Another thing that scares me kind of in a backhanded fashion, that fear and greed index that I watch so carefully, it is now bumping its nose on extreme greed. And I keep thinking, oh, good heavens, that means the amateurs are getting excited. Now we're really in trouble.
That's right. That's exactly right. Until, once they get lured back into the market, and the market continues to go higher, what do we see? We see the professionals start to back out, and the individual trader ends up staying in and takes the brunt of the downfall.
Oh, yeah, you call it the FOMO syndrome, the fear of missing out, but it almost always is driven by amateurs that get in too late, and that's when people start saying, well, the stock market is nothing more than gambling. Well, yeah, it is to an extent, but often it's a matter of just bad timing, too, because those of us without million-dollar research budgets, we end up missing the peaks because we buy at the peak and then get in trouble later.
That's right. That's for sure. We,
Tidbit, tidbits out this morning, just for what it's worth. We were talking about the automotive industry yesterday. Stellantis, the Dodge and Chrysler parent company, off 13% yesterday off of that crappy guidance report they gave out. I didn't see what happened to GM and Ford, but I got to believe the auto sector is not a happy camper this morning.
well, I tell you, Ford may be getting a little bit of a break because they actually got upgraded by Goldman Sachs
Cool.
from neutral to buy, and so that actually had them up today about almost 2.2% this morning.
Well, that's good. They got to be a little bit of an outlier after seeing that. Let's see. Jay Powell was doing the rubber chicken circuit and still reiterating his commitment to a soft landing. Says the economy's solid and did his level best to lower expectations. Some birds are talking about the possibility of another 50 basis point rate cut, and he was trying to throw cold water on that. I don't think it's changed the odds makers, Eddie. Do you?
I don't think so. I mean, I just I hope not. I hope they let this half point settle in and make sure that it's going to do what they think it's going to do before they go lowering rates again.
And we're kind of singing the same song that we were on the way up. Don't move too fast in any one direction because you do run some risks. It takes 6 to 9 months really to see the results and bake in an increase or a decrease. Yeah, you get a faster response from a decrease, but that's immediate fear of missing out stuff going on. As far as the actual impact on this aircraft carrier of an economy that we've got, you're still talking 6 to 9 months to see what we're actually doing to the economy as a whole.
Well, that's right. And I can't stress this enough. This dock workers strike thing, that is a big deal. That's going to put pressure on our economy and raise inflation. And so I think that, and I guess the big fear part is that they're not even talking to each other yet. And so, I think that needs to get worked out sooner rather than later. And now, granted, they are asking for some unrealistic things that they need to be willing to do without as well. But I think that needs to get resolved relatively quickly, or our holidays are not going to be joyful.
Yeah, no matter who wins or loses this thing, if it lasts for more than a couple of weeks, I'm sorry, but your Christmas shopping list is on a boat in Los Angeles right now, and it ain't coming off onto the docks anytime soon.
That's right. So we still got that to deal with, and so
And
we shall see.
yeah, frankly, that economist that was saying that we could see 9% inflation again if we have a 3 to 4 week dock workers strike, just that absolutely makes my teeth hurt thinking about it. But it's a realistic possibility. Like you said, the two parties aren't even speaking to each other right now. It's kind of like the Boeing strike. They just say, well, that's fine. We're just not going to speak to each other for a couple of weeks. And bad enough for Boeing. It's even worse when your entire Christmas shopping list and half the economy is sitting on a boat.
Well, that's right. It's
So,
not good news at all. Hey, I'm looking at my expected reports to come in, and
mhm.
Nike actually reports today after the market closes.
So I hear. What expectations are supposed to be pretty optimistic with their new CEO, I gather.
Well, they are expecting to have a profit come in, and not a bad one either. So we'll see what how they end up coming across the board here.
Understood. I know it's a quiet time because we haven't even started earnings season yet. That's not for another week and a half or so. Upcoming reports later on this week. Things get busy starting tomorrow with the private payrolls from ADP, the mortgage applications numbers. On Thursday, we got unemployment claims, and then on Friday, that proverbial unemployment rate. At this point, we're kind of grasping at straws, and we don't even have any solid reports of this morning. But you mentioned that Ford got upgraded. Have you got any other major changes in the companies that we're invested in?
There's a couple that have been upgraded, downgraded. We've got CVS Health. There's a takeover target, kind of a minority shareholder that's trying to get things accomplished there. And they are working with an advisory group now to determine if they can spin off some of their parts. Back in the day, they were trying to uh, grab things, insurance companies, pharmaceutical, prescription companies. And so now they're talking about maybe breaking things up again. And so that's got CVS trading up almost 2%. You
I've,
got the
I've
likes
always
of
been a I've always been a preacher of core competency, and when a drugstore bought an insurance company, it kind of made me shake my head.
yeah, that was definitely one of those things you just scratch your head and think, what are they thinking? But
Hmm.
yeah, but there's quite a few. I mean, you got Pinterest, got added on Goldman Sachs to their America's conviction list, and so that's got them trading up a little over 3% this morning. So there's some, as we
Cool.
head into this quarter, there's definitely some upgrades happening.
Happy to hear them. Resetting the table, it was a modest up day, enough to be able to give the Standard & Poor's a new record yesterday, 45 minutes before we opened this morning. What do the equity markets look like today?
So right now we've got the Dow down a third of a percent, the S&P 500 is down a little over a tenth of a percent, and the Nasdaq 100 is basically even right now. On the other side of the coin, on the commodities side, we've got silver up 3/4 of a percent to $31.68 an ounce. Gold is up 0.6% to $2,675 an ounce, and crude oil down 1.1%, Dave, to $67.39 a barrel.
Go 40.
Yeah, baby.
You can always hope, can't I? Overseas markets, that Chinese stimulus is really driving the Asian rim. The two Chinese mainland markets both up 10 and 8% again overnight. They're actually starting to look like boom times over there. If it weren't artificially stimulated, you'd be happy to see it. Everything else pretty much followed suit. Australia and South Korea were off. Other than that, it was a good day in the Asian rim. Europe is finally figuring out, oh, okay, we got our poop in the group, and our major trading partner over in China is getting their act together. They're up in the middle of the range, about between a third and a half a percent, halfway through the European trading day this morning. Getting my retirement plans together someday, I want to be able to plan on being able to continue living the way I am now. How do I get a hold of you to make that plan happen?
Yeah, that's why I developed the core retirement design to help people design that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And you and me together again tomorrow morning to see what things look like on a couple of big reports coming out. I'll see you then, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
And folks, again, I want to thank you for joining us today. Have a great day. Join us again tomorrow. Take care. Bye now.